We're also seeing investors get extremely excited for companies that are AI related based on revenue growth expectations. We saw that happen just last week with Oracle. Like a lot of the hype around Oracle is revenue growth expectations, which, I'm sure they have a good way of projecting that. Of course, they have these backlogs that should result in revenue, but they still need to execute, and doesn't mean that they'll be profitable. So you're seeing all these things, and you're seeing more and more investors that are less, or the market that's less focused on profitability and just more revenue growth, or even just the story behind the company. And I've had people share names with me that have little to no revenue, but there's a nice story behind it. The reason I wasn't to mention all of these things is just to emphasize how much hype there is in the market right now around AI.
Yeah, so I think we went over this on our market top video, I think it was a few weeks ago, and Goldman Sachs has a speculative trading indicator, they call it, and they track like a certain amount of speculative activity based on particular metrics they look at. And one of the metrics is companies that trade at more than 10x EV sales. So this would be publicly traded companies, obviously. So when we have those startups, they wouldn't really include this. Startups typically trade higher, but if you're having an institution like that stating that anything over 10x EV sales would be highly speculative, and then you have some of these companies trading at 20, 30, 40x, I mean, there is a lot of growth priced in right now, because obviously a lot of this guidance and a lot of these outlooks, it's publicly available information. I mean, the market is going to price that in generally, like immediately, actually. So in this situation, you kind of need the story to work out. And the story right now is there's no doubt that AI is revolutionizing a lot of the things we do. But I mean, the profitability is the one thing that is probably the most up in the air. Like, how profitable will it be? And especially when we talk about the hyperscalers eventually, like how much money they're dumping into AI infrastructure is just crazy.
Yeah. Or we're paying just crazy amounts just for a good story,
Yeah,
right? I
exactly.
think pets.com is
Yeah.
one of the one that is most often cited here. First one, probably the most obvious one, semiconductors slash hardware related to AI. So those are often described as the picks and shovels of AI, because there's a saying that no one really made money during the gold rush except those selling the picks and shovels.
Yeah.
So yes, they will, whether AI becomes big or not, as companies keep buying NVIDIA GPUs. I mean, NVIDIA is selling those GPUs. So whether those GPUs end up doing something great in terms of AI, who knows? NVIDIA doesn't really care at the end of the day. They're still selling those GPUs right now. And that's the hardware on which AI runs. So the figures I was able to find is that semiconductors global market reached a bit more than 600 billion in 2024, and PwC, one of the big accounting firms, is forecasting that it will surpass 1 trillion by 2030. And to be fair, that's more than just AI, but a big portion of that clearly is related to AI expenditures. Semiconductor demands should remain strong due to things like electrification and the fact that they're putting chips in almost everything now, whether it's AI or not, right? Related. So one subset that should also see some strong demand, according to PwC, and it's hard to not agree, is self-driving vehicles. And of course, self-driving, there is going to be some AI in there as well. So it kind of goes back and touches everything. But some of the names here that are well known in the AI space, NVIDIA and AMD, ASML. So obviously NVIDIA making the GPUs, AMD in that same space as well. They're designing those. ASML, they manufacture the machines that are used to make those semiconductors, to keep things simple for people that are not familiar. TSM, Taiwan Semiconductors, they are the ones that actually manufacture the chips with the machines from ASML, from designs
Yeah.
from companies like NVIDIA and AMD. I know can be a little bit complex, and you hear semiconductor, but they are different places in the semiconductor, I guess, life life of a semiconductor, creation of a
Life cycle, yeah, the
semiconductor, life
assembly line.
cycle, assembly line, exactly. There's also Broadcom, ticker AVGO. They design different types of chips that play a role in AI, including networking chip, wireless chips, broadband chips. They also work with hyperscalers to design custom AI chips. ARM is another one. It doesn't manufacture chip, but licenses its design and intellectual property, which is used by companies like NVIDIA, Apple, and Qualcomm. And there is really one big question for these companies, in my opinion, is can they grow quickly enough to justify today's valuation?
I guess all I would say for this is like I would probably view this as what I would say is most likely to succeed or at least be steady in the realm of AI. And the reasoning for this is, as you had mentioned, they're kind of, I don't know how to say it, top of the food chain. I mean, no matter how profitable it is for somebody developing an app or a piece of software or something, they're going to buy the semiconductors. These companies get paid before all of that happens. If AI capex were to dip or slow down, obviously there would be lower demand from these companies as well, but it wouldn't really evaporate because, like you had mentioned, they're putting chips in absolutely everything. These aren't necessarily AI pure plays. Obviously, a lot of the run up in valuation over the last year or so is related to AI. Like, I don't get me wrong, if it were to slow down, these companies would be impacted quite a bit. In terms of other companies, I mean, there's so many different types. You have Micron is another one I can think of. I think they trade under the ticker MU. So they provide a lot of the like memory based chips that these like LLMs and AI systems use to store the data, or you even have something like Applied Materials, which would kind of be on the like the ASML side. These are the picks and shovels plays. And as you had mentioned, in a gold boom, the first ones that get paid are these types of companies, while farther down the chain, there's a lot of boom and bust here.
And if you're looking for an ETF idea, the VanEck Semiconductor ETF, ticker SMH, would be one to consider here. Again, all these companies were just providing ideas. Make sure you do your own research.
Yeah.
I know we have a disclaimer, but some we know better than others, and whether they're good investments or not, right now, it's not for us to
Yeah.
say. You need to make your own assessment.
The only other one I would say is if you're looking for a Canadian ETF, Global X has one chips. I think it trades under the ticker
Oh, yeah.
CHPS. So it contains much the same as a lot of these like US semiconductor ones, but it just trades in Canadian dollars. I do think they have a US dollar version as well, but I'm not 100% sure on that. But I know a lot of people listening to this are obviously going to want to keep the currency
Yeah.
in their home currency.
If you'd like to listen to the full episode, head to your favorite podcast player and type in the Canadian Investor Podcast. If you'd like to watch the full video, go to jointci.com and you'll be able to subscribe to our Patreon page. On top of that, you will get the podcast feed ad-free. You'll also get our monthly portfolio update and my parents' retirement portfolio update, which I manage myself.